Hey there, savvy home buyers and real estate investors. Welcome back to another market update where we dive deep into what's really happening in the Greater Toronto Area real estate landscape. Are you feeling overwhelmed by all the mixed messages about today's housing market? Wondering if now is actually a good time to buy or sell? Well, you're in the right place because today we're breaking down the latest data from the Toronto Real Estate Board's March 2025 report, and there's some genuinely encouraging news about affordability that you need to hear. In my subsequent videos, I will be doing a market analysis for different parts of the city, particularly markets that I cover as my home market. However, if there is a neighborhood or city you would like me to cover, I would be more than happy to provide you with a market analysis video. Just comment below which city you would like me to cover. Alternatively, you can book a call via my Calendly link and we can discuss the numbers in more detail on a one-on-one call. Let me start with the big picture. The Toronto Real Estate Board has reported that home ownership in the Greater Toronto Area has actually become more affordable in March 2025 compared to last year. This is a significant development because both borrowing costs and home prices have declined over the past 12 months, making those monthly mortgage payments more manageable for households looking to buy. According to Toronto Real Estate Board President, home ownership has become more affordable over the past 12 months, and we expect further rate cuts this spring. Buyers will also benefit from increased choice, giving them greater negotiating power. But there's something interesting happening with buyer behavior. The Toronto Real Estate Board notes that given current trade uncertainty and the upcoming federal election, many households are taking a wait-and-see approach. They need to feel confident about their job security before committing to those long-term mortgage payments. In March 2025, Greater Toronto Area realtors reported 5,011 home sales through the Toronto Real Estate Board's MLS system. That's down by 23.1% compared to March 2024. Meanwhile, new listings increased significantly to 17,263, up by 28.6% year over year. Now, these are views of what has happened year over year, but if you're in the market looking to sell or buy and want to get a better feel as to what is happening in the market, would you want to compare data on a month-over-month basis or year over year? Well, this is why I do these videos, to arm you and make you a better real estate investor in real time. While year-over-year data is important on a macro level, you are in most cases looking to act now and need information that is more pertinent in your buying and selling decision today. Obviously, if you are watching these reports just to see what is happening in the market in general, then even still, you will have a better understanding on the ground level what is happening. Now, let's take a deeper dive into the numbers and see exactly what's happening across different property types in the Greater Toronto Area. These figures paint a fascinating picture of our evolving market, and understanding them can give you a serious advantage whether you're buying, selling, or just keeping an eye on your investment. We will be going through lots of numbers, so I highly encourage you to pause the video when we are going over numbers most important to you. Let's get into it. Looking at all property types across the Greater Toronto Area, the median price in March 2025 reached $950,000. That's a positive 1.9% increase month over month from February's $932,500. However, when we look at the year over year comparison, we're still seeing a 3.6% decline. Total sales in February were 4,146, while active listings stood at 20,516. That's a crucial ratio to understand. Active listings currently exceed sales by 5 times, which clearly signals a buyer's market. What's particularly telling is the sharp rise in new listings. In February, we saw 13,065 new listings, but March jumped to 17,319. This surge suggests increasing seller pressure and points toward potential further price softening. For condo apartments, which are often the entry point for first-time buyers, the median price reached $605,000 in March. That represents a slight 0.4% increase from February's $602,643. Year over year, however, this segment has experienced a 5.7% decline, the steepest among all property types. February sales totaled 1,228 units, while active listings stood at 7,738. New listings in March rose to 5,537, significantly outpacing sales and creating an oversupply situation. With inventory levels this high and demand weakening, condo apartment owners should take note of this challenging market dynamic. Condo townhouses showed remarkable stability with a median price of $754,333 in March, representing just a 0.1% decrease from February's $755,000. Year over year, we're seeing a 3.7% decline. February sales were 306 units, with active listings at 1,513. New listings in February were 982. The active listings being 5 times the sales volume suggests market stagnation despite the relatively stable prices. Detached homes, which typically drive market trends, reached a median price of $1,300,000 in March. This represents a 0.8% increase from February's $1,289,444. Year over year, however, we're still seeing a 4.1% decline. February sales totaled 1,660 detached homes, while active listings stood at 7,540. New listings jumped significantly to 6,926 in March. With listings running 4.5 times the sales volume, buyers of detached homes can expect longer market times and potentially more negotiating power. Semi-detached homes saw their median price reach $1,025,000 in March, a slight 0.5% increase from February's $1,020,000. Year over year, this segment has experienced a 4.2% decline. February sales were 378 units, with active listings at 938. New listings in March jumped to 1,166, which is 3 times the sales volume, reflecting weakening demand despite the modest month-over-month price gains. Freehold townhouses have shown impressive resilience, with the strongest month-over-month price growth among all property types. The median price reached $953,750 in March, representing a solid 2% increase from February's $935,000. Year over year, this segment has experienced the smallest decline at 2.7%. February sales were 404 units, with active listings at 1,414. New listings increased to 1,570 in March. While active listings are still 3.5 times sales, the stronger price performance suggests buyers are gravitating toward this more affordable ownership option compared to detached homes. What does all this data tell us about the current state of the Greater Toronto Area real estate market? Let's break down the key takeaways. First, we're witnessing a significant surge in listings across all property types. Condo apartments saw new listings increase by 25% month over month, while detached homes jumped by 38%. This oversupply is a primary driver behind the year-over-year price declines we're seeing. Second, the market has clearly shifted in favor of buyers. When active listings dwarf sales by a ratio of 5-to-1 for the overall market, buyers gain substantial negotiating leverage. This is a fundamental change from the seller's market we've seen in previous years. Third, condos, both apartments and townhouses, are facing the steepest year-over-year declines at 5.7% and 3.7% respectively. With inventory piling up fastest in these segments, condo owners and investors should be particularly attentive to market conditions. Fourth, while detached and semi-detached homes show slightly more resilient month-over-month price performance, they remain vulnerable due to high listing volumes. The substantial gap between new listings and sales suggests continued downward pressure on prices in these segments as well. If you're a buyer in today's market, these conditions present some compelling opportunities. With active listings exceeding sales across all property types and prices trending downward year over year, you have more options and stronger negotiating position than at any point in recent years. For sellers, this data underscores the importance of realistic pricing and exceptional property presentation. With competition intensifying and buyers having more choices, properties that are overpriced or poorly presented risk sitting on the market for extended periods. Investors should pay particular attention to the condo apartment segment, where the combination of higher inventory levels and steeper price declines may create value buying opportunities, but also suggests caution for those considering selling in the near term. First-time buyers might find the freehold townhouse segment particularly interesting, as it shows the strongest price resilience while offering a more affordable entry point than detached or semi-detached homes. If you're finding value in this detailed market analysis, now would be a great time to hit that like button and subscribe to the channel. Turn on notifications so you never miss these crucial market updates that could impact your real estate decisions. Your support enables me to continue creating this detailed analysis every month. Now let's talk about your specific situation. Everyone's real estate journey is unique, and these numbers might mean different things depending on your goals. I'd love to help you understand what these market conditions mean specifically for you. I invite you to book a free consultation call with me through my Calendly link in the description. As a licensed Level 2 agent, I can assist not only with buying and selling properties, but also with getting you a new mortgage or restructuring your existing one. We can discuss an in-depth analysis of a potential home purchase or evaluation tailored to your specific needs and goals. A critical factor to monitor going forward is inventory levels. If listings continue rising at the current pace while sales remain subdued, we can expect further price corrections, especially in the condo segment. The anticipated interest rate cuts mentioned by the Toronto Real Estate Board may provide some stimulus to buyer demand, but economic uncertainty and concerns about job security are likely to remain significant factors influencing market dynamics. Remember, the best decisions are informed decisions. While today's market presents certain opportunities, it's important to consider your long-term financial goals and personal circumstances. Stay savvy, stay informed, stay knowledgeable, and until next time, may your investments flourish and your dreams of home ownership become a reality. Catch you in the next one.